Wanted to take a look at the stock market today. As of the numbers that I'm looking at right now, the stock market today is moving higher. But will that continue in that direction? We've been going through a tremendous bull market. And one thing to keep in mind is that the stock market itself is actually a reaction to what's going on with the economy. Unfortunately, there are signals within the economy that are telling us that the probability of the United States entering into recession is higher than 50%. It's almost 65%, although it is lowering. Now, these indicators that I'm looking at coming from the New York Federal Reserve are telling us that more likely than not, we will enter into a recession. Now, the Federal Reserve, of course, has been trying to engineer a soft landing. Let me give a little hint. They've never engineered a soft landing. In fact, this is the same exact Federal Reserve that missed the fact that we're in the midst of increasing inflation. They just sort of brushed it off saying, hey, it's transitory. It'll go away. Then they had to move at warp speed to raise interest rates back upward. Now they're telling us we're going to hit this soft landing. The Federal Reserve never gets it right. There's a lot of moving parts. I wish them the best, but my goal is to make money in the stock market. Because of that, despite the fact that the stock market is up today, we are seeing signals that are telling us that the United States is likely to move into a recession, and it's about a 65% probability rate. That's pretty high. Given where we were, the transition, the fact that I think the Federal Reserve got it wrong yet again, lowering interest rates too fast, probably going to have to keep interest rates at higher levels for some period of time, if not moving upward. Then we have to deal with Trump tariffs and everything that's going on with that. Given all those variables, I believe that the United States will enter into recession. This is something I've been calling for some period of time. I thought it was we would start to see a sell-off in September, October, November, December. I may have missed it by just a little bit. Regardless, the signals are there. Let me show you a few charts as to what I'm looking at and why I believe the stock market today is up, but will fall through 2025. Let's jump in. Here's a good look at SPX. This is actually the S&P 500. And as you can see from very early in November, we've had a nice little Trump bump. The SPX has been kind of hitting this sort of level where there may be a ceiling. If you look at, say, the Dow versus the NASDAQ, they've been doing about the same, but they're not exactly moving in tandem on any one particular day. But let's take a look at the bigger picture. You can see 2020 right dead smack in the center. That's when the Federal Reserve really kind of stepped in and did everything they could to really keep this economy moving instead of the economy shutting down significantly because of COVID. Now, looking at this chart, we've been on an extraordinary bull run since the very low dips in 2020 and also all through 2022. Prior to that, we had seen some growth in the SPX, the stock market, but not nearly as much as what we've been seeing over the past, say, 2 years' time. Okay, this is the bigger picture, but this is what I want to really show you. This is the 10-year minus the 3-month Treasury yield. The spread between the 10-year and the 3-month doesn't really get a lot of attention too often. And as a matter of fact, when I saw something blurb a couple days ago regarding this, I was like, wow, the 10-3 month. You only hear that every once in a while. And when you do, it usually isn't really a great thing. So this chart here is the 10-year minus the 3-month. And as you can see, there have been some periods, and this goes all the way back to 1986. You can see the stock market crash in 1987 right there. Also, you can see the dot-com era. You can see the financial crisis in 2008. And then, of course, you can see what has happened with COVID. But this is the chart that I really wanted to focus on. The probability of a U.S. recession 12 months ahead of the spread readings. All right. Now, going backwards, when you look at this, Going above 25%, the stock market itself, the probability of a recession after it's exceeded, say, 25%, and you can see some big jumps higher, it's never really gone into this probability factor has never really gone above 25%, and we not gotten a recession. If you look back in 1968, there was a move. You can see there were some price shocks with oil embargoes against the United States prior to the government making deals with Saudi Arabia and things of that nature. That was probably the only time. Other than that, when we've exceeded, say, the 50% mark, we've had big problems. Now, it may not be that we're seeing the recession start today, but we'll start to see the signs of this. And what are the signs that would drive the stock market lower given a high probability of a recession? First and foremost, the recession itself. But what would drive a recession? Exhaustion is one thing, higher interest rates. Expenditures, generally speaking, have continued to move higher and higher, but the consumer is exhausted. Price pressures have continued. Looking throughout the world, the incumbent parties have been dismissed out of political positions because consumers are exhausted. The price moves were so extraordinary. What I find interesting is, although President-elect Trump has said on day one he will sign a piece of paper and that's it, inflation's done. Now he's saying, well, we can't guarantee grocery store prices are going to go lower. He hasn't even sworn in yet. Fact of the matter is he has very, very little control over those kinds of things. It was just something to get elected. The Federal Reserve is the entity within the United States that has a dual mandate of price controls and maximizing employment. The President of the United States really doesn't have much that he can do regarding those two things. The Federal Reserve has done what it needs to do to contain price pressures. But the damage is already done. The consumer is being exhausted. I don't think the Federal Reserve is done with their interest rate policies. We just got inflation numbers last week. We're going to get PCE inflation data a little early this month, simply because the end of the year happens to be in between two major holidays. In this particular release, the CPI data gives us a pretty good idea of what the PCE is going to tell us. The PCE, of course, is the favored indicator for inflation for the Federal Reserve. I have said repeatedly, if you've been watching my videos for any period of time, that when the Federal Reserve didn't raise interest rates because of inflation, I kept saying over and over and over again, they're missing it. Then I kept saying, and you can look at my videos, then I kept saying the Federal Reserve is moving too soon. I did not believe that the Federal Reserve could lower interest rates prior to the end of this year. They already did. More likely than not, this week they are going to lower interest rates again, and I think that that is a huge issue. This economy is still moving forward, and so is inflation. Because of that, the Federal Reserve may have to reverse their positions at some point in the future, but there is the Trump factor. What will happen is Trump will, if he actually does do his tariffs, that will help to actually alleviate inflation, because what it'll do is it will remove money from the system, and then the money supply won't grow nearly as much. Because of that, that could halt expenditures, which will lower price pressures, but it also means we're probably going to see unemployment moving much higher. So on the one hand, hey, prices are dropping. On the other hand, you just lost your job. When that happens, of course, the Federal Reserve will have to then start lowering interest rates in a reactive mode, But that doesn't happen until January. We still don't know if Trump's actually going to pull the trigger on that. He's already backtracking on a lot of things he said just to get elected. He may not do his tariffs. Someone may sit him down and say, this is really a bad thing. We'll see. I kind of lean towards someone's probably going to tell him, listen, this is really a bad thing. So we don't know if that's going to happen. Regardless, at this point, with the Federal Reserve, I think they moved too soon. You're looking at probabilities touching nearly 70% that the United States enters into a recession. The stock market, based on that, its bull run we've seen, we will see selling occur. You'll see that revenue growth in companies is going to start lagging. Because of that, stock investors will start hitting the sell button. Right now, we're on cruise control. The stock market continues to move higher and higher and higher, but that is being exhausted as well. Now, I did want to point out, if you look way down at the bottom here, I'll put in a link down below, the Federal Reserve, where I got this chart. You can see some of the data and kind of play around with that if that's your thing. With such a high probability, if you were to walk into a casino and you were given that probability, I would hope you would never leave the casino, simply because you could never really lose in the long run. You may lose one or two bets here and there, but in the long run, with such a high probability, you're going to walk out there quite wealthy. And this is my take on this. I don't really play politics, although I'll look at someone's policy and say, wow, that's really bad, because it will have this reaction. My goal is, okay, you want to do that one thing? That's a really bad policy, and I'm going to make money because of it. And that's really kind of how I'm taking a look at this, because that's what the stock market is for participants like myself and probably you. Okay, so you may support Trump. Great. He's got really horrible policies. You can make money off of that. That's my take. As far as business, how many times has he declared bankruptcy? That's how good of a business person he is. He's not. I don't think he came up with the whole tariff thing. I don't think he came up with a lot of things. I think someone got his ear and said, listen, these tax things you're going to be doing, that's really bad. But then what you could do is offset because of the tariffs, this, that, and the other thing, and everything works out great. And you look like a champ. Maybe that's what happened. And maybe we do see those tariffs, maybe we do not. For right now, despite the fact that the stock market today is moving higher, I think we are exhausted with this stock market. And from here, we will start to see selling, because we're going to start to see information coming from inflation data that the Federal Reserve moved too fast, too soon. They're going to have to reverse, start bumping interest rates up a little bit higher. Now, Trump's tariffs could rock the boat one way or another. Because of that, we'll see how that plays out. But I'm here to make money in the stock market. And because of that, I'm seriously taking a look at where will the stock market be at the end of 2025, and how can I make money from that? I'm looking at my crypto positions and saying, wow, these are really extraordinary prices. I'm looking at, say, 30. I own a bunch of Ethereum. I've got some Solana, a little bit of Bitcoin, not worth really bringing up. I play really Ethereum. I'm looking at big moves downward over the course of 2025. I'm looking to buy puts because of that. Maybe even sell some calls. I think that we see assets, broadly speaking, selling off throughout 2025. The probability of that, greater than 50%. I'll never leave the casino. Links are down below for this particular the New York Federal Reserve Board of Governors calculations. I don't know if you actually click the link. I saw what I put together. You may have to get in there and start clicking a few things and kind of changing the parameters a little bit. But it's pretty interesting information. Also, link to my Substack newsletter down below. We'll see you in the next video.